So you just turned 18 and you want to learn how to start building credit. Credit is what runs the world. Almost every successful person has came across or had to use credit in order to be successful. Credit is a tool, but it can be dangerous if you don't know how to manage it correctly. So today, I'm going to go over the best way to build credit at 18 years old. Like, subscribe, and share this video with anyone you think would find this valuable. This helps me reach more people and help them start building credit young so they can be successful. Make sure to stick around till the end of the video as I will share how I got my score from a 600 to start to almost an 800 in only just a year of starting to build credit. So what's the best thing you can do to start building credit? The best way to start is to get a secure credit card or take out a secure loan with your bank, preferably a credit union, as they will have lower interest fees and they're just more likely to get approved for it. How do you do this? For a secure credit card and a secure loan, you have to go to your bank. So what do? You walk in the bank, you ask them, hey, I want to get a secure credit card or I want to get a secure loan. This helps you to start building credit, and it also helps you not spend all your money at once on a car. The most important thing to start building credit is to start now. So start figuring this stuff out right now, or as soon as you're done watching this video, because I still have a lot of valuable information to give you. But as soon as you're done with this video, go to your local credit union, open a checking account, and ask them about a secure credit card or secure credit card loan. But you will need that money in hand. So as you are technically borrowing your own money and gaining trust with the bank, that the bank is testing your money management skills and your credit management skills to trust you more and lend you money in the future. This is what you're trying to do. Gain the bank's trust. That's what a credit score is. The second thing you want to do, once you have started with a secure credit card or a secure credit card loan, then you want to start monitoring your credit. That way you are aware of everything that's happening to it. I recommend you download Credit Karma. That's what I use myself. I've used Credit Karma since I started, and it's helped me keep getting cards, and it helps me time when I should get a card. It gives me advice as to what I should do to continue increasing my credit. And it's just a tool, a great tool overall, and it's a free tool. So why not take advantage of it? And you will need to be monitoring your credit if you want to make progress, because if you're not, you're just blind, and that's not good. Once you have applied for a secure loan and downloaded Credit Karma to monitor your credit, you want to start building that credit. Once you start building that credit, you want to identify your spending habits. What do you spend money on? Do you go out to eat a lot? Do you go to the movies a lot? Do you like to travel? What do you spend money on yourself? Identify these things. You want to base your credit cards off of your spending. You get the most benefits out of the credit cards that you choose by identifying what you're spending on. Once you start establishing credit, you start monitoring your credit, you identify your spending habits, you get your first credit card based off your spending habits. So if you go out to eat a lot, get a card that gives you cash back or gives you rewards based off of that category. Get your credit card based off of what you spend on. If you're going to spend a lot of money online shopping, get a card that has cash back on online shopping or has benefits or points on online shopping, as you will get the most value back out of it. I myself get a new credit card every 2 to 3 months. Right now, I started about a year ago. I think I have about 8 credit cards, if I'm not mistaken, and I use all of them because I have different categories for all of them. I might have one for food, I might have one for gas, I might have one for the supermarket, one for online shopping, one for travel. I have one for everything that I do. Now, if you don't travel, if you don't spend on food, you want to get them based off of what your spending is and build credit that way. Pay those cards off. Use those cards like debit card. Do not spend money that you don't have. My recommendation is that you keep getting new credit cards based off of your spending habits every 2 to 3 months, maximum every 6 months. This is very personal, very dependent. If your score has not raised or has not gone up, then you don't want to get the credit card, as you want the best deals, you want the best offers, and with the higher credit score at the time is how you get those offers. As you get to higher credit, you might get offered a higher limit, which a higher limit will build your credit over time. As you get a higher limit, it will be easier to maintain your credit utilization, which I'll get into later, and it will help you continue to build credit. So you got your secured credit card, you monitored your credit, you identified your spending habit, you continue to get credit cards every 2 to 3 months. And before you even do this, or once you start building credit, what I would recommend you do so that you protect yourself from identity theft, it is very real. I've seen multiple people get their identity stolen. I have not gotten mine stolen myself, but I've already protected against it because I'm in fear of it and I don't want that to happen to you or me or anyone around me. So what you're gonna do is protect your credit by freezing it. Equifax, TransUnion, and Experian. You wanna go to these 3 websites. Do not take their offers. They will try to sell you products. You don't need it. If you have Credit Karma, you can use all that. They'll tell you that they'll protect your credit. You don't need any of that stuff. You just need to go in there, create an account, and freeze your account. What does this do? This stops anyone from pulling your credit, even yourself. If anyone that's not you tries to apply for credit under your name, then your credit will be frozen. So you might think, oh, if I'm freezing or if I can't pull my own credit, then I can't get new credit cards. How do you apply for credit when your credit is frozen? You lift. You do a lift. You have to go to all 3 websites and do a lift. Maybe that is for a couple hours. Maybe that is for a day. Maybe if you're applying for a car loan or a new credit card, which is you can apply for the credit card. They can pull your credit. You can get approved. And once you're approved and the credit card's on your way, then that lift will automatically freeze again, or that thaw. Sometimes they call it that. Sometimes it's a lift. Sometimes it's a thaw. That thaw will freeze again the next day once you are approved for that credit card, and no one can apply for credit under your name. Now, you started building credit, you got a secure credit card, you're monitoring your credit, you're getting new credit cards every 2 to 3 months based off of your spending, and you're protecting your credit by freezing it. Now, I want to get into how to maintain those credit cards, because just because you got approved for a credit line of $1,000 doesn't mean that those $1,000 is everything that you should use. Usually, you want to keep your utilization on your credit card below 30%, and I fully recommend keeping it under 10%. That means if you get approved for $100, use 10. If you get approved for 1,000, use 100. If you get approved for 2,000, use 200, and don't go over that. And if you do go over that, pay it off as soon as you can to keep it off of that. Now, there's ways around this that I won't get into today, but you want to keep your credit utilization low as you're building credit so you can keep getting more credit cards, keep your credit score good, and keep applying for more, as it will get easier to keep your credit utilization low as you get more credit cards. Why will that happen? Because your credit limit is not based off of one credit card, it is based off of all your credit cards. So if I have one credit card at $1,000, then 10% of that is 100. But if I have 10 credit cards that all have a credit line of $1,000, I have $10,000 in credit limit overall. And if I'm using $1,000 across all of those credit cards, I'm still keeping it at 10%, and my credit score is still high as my utilization is low. 2 to 3 days before your payment is due, I would pay the credit card and I would not use it for the next 2 days until that date has passed. So if your credit card is due on the 27th, pay on the 25th, don't use it for the 2 days, and on the 28th, you can start using it again. That's usually how I do it. You don't have to do it like that. But I just don't like paying any interest at all, and I avoid it 100%, as I don't like to give away money for free. I like making money from the credit card. Once you have more credit cards, a lot of credit cards have programs to refer or welcome bonuses. Now, this is the money maker right here. This is how you can start making extra cash on the side. You can refer people to the credit cards that you have and get up to $1,000 extra per year just off of referring people, which is just telling somebody and giving somebody a link. And then if they sign up and get accepted, you get money for doing no work at all. There are only certain cards that do this. There's limitations, but it is ways to get extra cash. Same as welcome bonuses. This is why you want to keep your credit utilization low and maintain and monitor your credit, and also look out for offers. What my offers look like? Usually offers are welcome bonuses. So it is if you spend a certain amount with that credit card within a certain time period, you will get a bonus. For example, if you spent $1,000 in the first 3 months, they might give you $200 back. If you're gonna make a big purchase, for example, like you wanna get new wheels for your car, as one example that I've done myself, but you wanna get new wheels for your cars, instead of taking out your money, get a credit card, spend the bank's money on those wheels, get cash back for it, because if you're in the right category, like if I'm getting cash back at online purchases and I purchased my rims online, I got cash back for purchasing those rims. But on top of the fact, if I have a welcome bonus and I got $200 back just for using the credit card instead of using my own money, if you add the cash back, And if you get maybe a discount, that's even more money that you saved just from using a credit card instead. And you can just immediately pay it off right after with your money if you have it, which if you don't have it, you shouldn't be spending it. Don't be stupid. That is how you get in debt. That is how your parents, if they are in debt, that's how they got in debt. You don't use more than you have when you spend on credit. This is how you maintain good credit. So it is important that you don't spend more than you have. Now, I've gone over the important steps to building credit, starting now. As soon as you're done with this video, go and start now. It is important that you start as early as possible, as the longer you have established credit for, the more your credit will rise, as your credit age will rise, as credit age is an average number. It is the average number of credit cards. Your credit age is not your oldest credit card. So if I got a credit card 5 years ago and I just got a new card last month, my credit age is not 5 years. My credit age is 2.5 years. Why? Because credit age is based off of your average age of every line of credit you have. And I will give you a way to raise that quickly. If you have somebody in your life that already has established credit, they can help you establish your credit quickly, which is what I did with my mother, for example. My mother has a credit card that she got back in 2015. Now, this year, I just started building credit. I wanted to build my credit quickly, and I found out about piggy backing. What is piggy backing? So, if, like I said, parent, friend, whatever, somebody that you trust and that they trust you and that you will be responsible with their card, please be responsible with their card because it affects them. There's certain lenders that report authorized users to credit bureaus. What are authorized users? So, for example, I have a line of credit that I've had for 10 years. I let my friend go on that credit line as an authorized user. I add them on that credit line as an authorized user. Now, if my lender reports my authorized user to the credit bureau, their average credit age goes from 0 to 10 years off of just that one credit card. Now, this is a way to build your credit quickly and get ahead of the people around you. If somebody around you has established credit or has a credit line like this, and you will be responsible, and they are responsible with their credit, because you guys both have to be responsible. If they don't maintain their credit well, if their credit cards are high, I would highly recommend against doing this. But if you have somebody around you that is responsible with credit and that has a credit line that is old, and maybe it's a throwaway card that they don't use anymore, that would be even more perfect. But if you can get on that credit line as an authorized user, your credit will go up numbers. That is how I was able to raise, or one of the ways besides using it responsibly, that I was able to raise my credit card by almost 100 points in just a few months. Now, I've gone over how to start, how to secure your credit, how to get a secure credit card to start building credit, how to identify your spending habits, getting into credit cards, how to space out your credit cards, as every time you get a credit card, you get an inquiry, and you want these hard inquiries to be separate from one another, as hard inquiries lower your credit for a temporary amount of time, which is no big deal, as every time you apply for a new lender, your credit will take a hit for a while, but you will bounce back, and you need to do this to build credit anyway. This is an unavoidable thing. And I've gone over how to freeze your credit to protect your credit. Now, what do you do now? Start now. Start now. Do not wait. Start now. Now, in the link below, I'll have a couple credit cards that I started with and a referral link with my Discover, which I think I have one referral left for that card that will make me $100, and it will make you $100 if you accept it. The Discover card, as of right now, has a $100 statement credit. Statement credit, this means that you can't take it out and put it in your bank, but you can go spend $100 and they will take it off your statement. But if you have somebody in your life that has this credit card, I would recommend that you try to come in with a referral bonus, as you will get $100 free, and so will they. So it's a win-win situation. But I will leave my referral link below to the first person that gets it. Congratulations on learning about credit. Subscribe for more information about credit, and if you want to take the best advantage of the tools that you have at your disposal, because the credit card is a tool, so use it correctly. If you use the tool incorrectly, it's a double-edged knife. Share this video with anyone that you think would find this valuable. Please be responsible with who you refer. Use it correctly. Please refer responsibly. Do not refer anybody that will not use the credit responsibly. Please share, like, subscribe, and have an absolutely amazing day. Go build your credit.